So today we are going to talk about the accounting for consignment. Okay, the accounting for consignment. What is a consignment? You're shipping the goods from the manufacturing spot to the distributor and the distributor in turn to the retailer. Okay, so you're sending the goods so that you can focus completely on your main business, that is manufacturing. Okay, so the manufacturer sends the goods to the distributor, distributor sends the goods to the retailer, and from the retailer it is given to the ultimate consumer or sold to the ultimate consumer. Right. Now sometimes it may be sold from one country to another country, and there are import duties that may be applicable. Okay, so for the manufacturer to be more economical, and the wholesaler also appoints, okay, the agents to sell the goods, the retail agents to sell the goods. And in this process, they will be dispatching the goods. This dispatching is known in accounting as consignment. Consign. The goods dispatched is known as goods consigned. Goods consigned. Okay, so the one as and one who is receiving goods is consignee. Now, when the goods are sent to the consignee, the title of the property of these goods remains with the one who is sending the goods, not with the agent who is receiving those goods. The agent can be distributor for the manufacturer or retailer to the distributor, anybody. These agents will not have any title over the goods or property that is being consigned. Okay, right. Next. In this discussion, what are the features that we can make? Consignment is not a sale, okay, but it is only a kind of relationship between the consignor and the consignee, just like the relationship between the principal and agent. And the consignee sells the goods at the risk of the consignor, and he doesn't shoulder any risk. Then you may ask me, sir, what about the bad debts risk that the consignee takes? Earlier in the classrooms, we have discussed. What about that? I'll come back to that when we are discussing about that. Okay, the bad debts, coverage of the bad debts. And the sale proceeds, all the sale proceeds of the consignment belong to the consignor, and the consignee doesn't have any right over the sale proceeds. He has to account for every unit that is sold. And what else he is entitled for? He is entitled only for the commission that is agreed upon at the time of, making a consignment agreement between the consignor and the consignee. And at that time, there is a deposit made by the consignee with the consignor. Okay, so he is entitled for the commission, and he is entitled, if he is covering for bad debts, he is entitled for extra commission. But every unit that is sold, the consignee is responsible to account to the consignor. Now, look at the remuneration to the consignee. It may be commission. The main remuneration is known as commission. There are times, as I told you, there is a risk covered by the consignee. Okay. Now he undertakes the responsibility of collecting from the bad debts. When the goods are sold, there's a risk of, bad debts. And to cover for those bad debts. Now the consignor says, I don't want anything. I don't want to take any risk, but I want you to take that risk. And what all the units that are sold, you have to remit all the amount to me. And the consignee says, sir, there's a 5% bad debt. Yeah, you take care of that 5% bad debts. Okay, I don't bother. I don't want to take that risk. It is your headache to collect money from them. and for which I will give you another 1% extra commission that I'm calling it del credit commission. Okay, then there's a commission, there's a del credit commission, and the consignee regularly on a monthly base, on a weekly base, on an yearly base, he sends the details of all his transactions, the amount he is spending, the amount of goods that he is selling, okay, and the commission that is due to him, all those details he'll mention in an account, okay, in a statement, in a format called account sale, and sends it along with the balance due amount to the consignor. The account sale is sent to the consignor and the account sale is prepared by the consignee. I want you to note that. Now look at this. This is a specimen copy of the account sale. Now let's say there are 100 cases of sports material sold on behalf of Paul. So yeah, look at this, the details. 40 units at 1200, 48,000, and 10 units at 1100, 11,000 rupees. Total amount is 59,000 rupees is the sales revenue. Now look at this. This is the sales revenue. This is the sales revenue. Okay. Now from this, he deducts all his expenses. Look at this: carriage, customs duty, insurance, selling expenses, and his commission. So all these are expenses and this is his commission. Sometimes there is an extra commission, del credit commission at 1% of the sales. So that is added here. Then the total amount is taken to the outer column of the amount. So 7450 in this case. Okay. And there is already some amount deposited at the time of agreement. Okay, when the the consignor and consignee agrees that the goods will be sent to consignee and the consignee will sell these goods on behalf of the consignor. As a precautionary measure, the consignor may insist the consignee for a deposit, caution deposit, and that is in this case 20,000. So this is the amount already paid, and these are the expenses and his commission. These two items are deducted. 27,450 are deducted from 59,000, and then you get 31,550. There's a date and a signature put here, and this is sent to the consignor. Is it clear? Hello?
Yes, sir.
Yes, sir.
Okay. Yeah. Now, some of the important terms in the consignment. Pro forma invoice, a statement prepared by the consignor while sending the goods with regard to the quality, the price, the quantity of the goods. All these details are mentioned in a statement, that is pro forma invoice. And there are some expenses directly incurred by the consignor also. All expenses till the goods are made available at the godown or the warehouse of the consignee are direct expenses. And non-recurring in nature, they are all non-recurring in nature. And they sometimes also increase the value of the goods. Okay, value of the goods. And sometimes it may not be so. For example, loading and unloading of goods. This doesn't increase the value of the goods. But freight and carriage definitely change the value of the goods. For example, in Surat, a particular cloth, a 1 ton of a particular cloth may be costing just 1,500. If the same is transported to Hyderabad, that may be sold for 15,000 rupees. It may be sold for 10 times 15,000 rupees. The transportation cost may be yeah, the cost may be around 3 or 4,000 and added and other expenses is added. If this is not transported from Surat to Hyderabad, it will be 300. When it is made available in Hyderabad, the value of the same cloth increases with the displacement. So that is what the sentence here says. Increase the value of the goods. Okay. Next, there are indirect expenses. Indirect expenses. And they are incurred after the goods are reaching godown or warehouse. And they are recurring in nature. I told you earlier also, for example, the good example for that is rent of the godown or warehouse and some maintenance charges of those goods received. Okay, salaries of the salesmen and the warehouse workers or the laborers. So they're all recurring in nature. But there are some, there are some non-repetitive expenses incurred by consignee also. Now we have to look into these two perspectives. There are some repetitive expenses and non-repetitive expenses. Recurring, non-recurring. In case of consignee, there can be recurring and non-recurring. In case of consignor, it is only the non-recurring. One-time expenses only the consignor spends, but the consignee has both recurring and non-recurring expenses. Next, what is the difference between direct expense and the indirect expense? The direct expense form part of the cost, and the indirect expense do not form the part of the cost. What does it mean? The indirect expenses are recurring in nature. They are not part of the value of the goods dispatched. Whereas the direct expenses form part of the cost, therefore they are included in the cost of when you're calculating, computing the closing stock, you will be including the direct expenses, not the indirect expenses. The indirect expenses are recurring in nature and they will not be used in the calculation of the closing stock. The calculation of the closing stock. Yeah. Please do stop me when I'm not clear to you. Do you understand?
Yes, sir.
Please stop me when you're not understanding. And I'll repeat that
Okay,
particular
sir.
point. Now, consignor usually maintains three accounts, right? As we have seen, consignment account, consignee account, goods sent on consignment account. Okay. Now, for each consignment, a separate consignment account is open. Okay. And this, take it for granted, has the nominal account principle. It maintains, it follows the nominal account principle. Debit all expenses and losses, credit all incomes and gains. It is just like your trading and profit and loss account. And the purpose is to know what is the profit or loss made on each consignment. On sending goods to the consignee, what is the entry that you make? Consignment account is debited, goods sent on consignment is credited. And for the expenses paid or incurred in connection with the consignment account is debited, cash or bank account is credited. And expenses of the agent. Okay. On receipt of the account of sales, the consignor enters all the details in the books. Now, whenever there are sales or sale proceeds received, or for the total sale proceeds that are received by the consignee, the entry is consignee's account debit to the consignment account. That means the sales are credited in the consignment account. The sales are credited in the consignment account. With the expenses incurred by the consignee, the consignment account is debited and the consignee's account is credited. And for the commission, the same entry, consignment account is debited, consignee's account is credited. Okay, now let me come one by one. First one, this is number 3. Okay, in this slide it is first one. In the order it is number 3. Consignee's account debit to consignment account. Consignment account debit to consignee's account. Consignment account debit to consignee's account. For the sales on the consignment for the sales by the consignee, consignee's account debit to consignment. For the expenses incurred, consignment account debit to consignee's account. For the commission to be received by the consignee, consignment account debit to consignee's account. And for the money received from the consignee, cash account or bank account, if it is a check bank account, debit to consignee's account. All these things in the books of the consignor. All these things in the books of the consignor. In the books of the consignor, the one who is sending the. Now come again the entries. On sending the goods to the consignee, expenses paid, sales by consignee, expenses incurred by the consignee, commission of consignee, and last of all, the balance due to be received from consignee. The balancing figure on the consignment account is a profit or a loss on consignment to be taken to the main income statement. The balance on goods sent on consignment is transferred to the income statement in determination of gross profit. That is the headache of the consignor. He does it later, but we don't do it now. Now, consignee's records in the books of consignee. On receiving the consignment, no entry is made in the books of account. The goods do not belong to the consignee, but the consignor. But a memorandum record will be made by the consignee, showing all details of the goods received. He is not the owner of the goods, so therefore he doesn't make any entry. But he will make some record of the goods that he is receiving, that is memorandum record. And with the cash from sales of consignment, cash account debit to consignor account. Because it goes to the consignor, not to him. For the payment of consignment expenses, consignor to cash. For the commission that he has to receive, consignor to profit and loss account. For the cash to settle with the consignor, consignor's account debit to cash account or cash book. Okay, look at this. In the books of the consignee's name will not be mentioned anywhere. It is only the consignor's name mentioned. In your case, actually, it is consignee's account debit to the consignor. So in your book, that is you, consignee, in your book, you cannot write your own name. Therefore, you mention as cash. Right? Now, look at this. For the payment, in your book, you're paying the amount. And your account is to be credited, but your name is not appearing here. And in this moment, your name is consignee. It is not consignee here, but cash account or bank account. If you're paying by check, it is bank account. The consignor's account debit to cash account. And for the commission, it is the same. Whether you are supposed to receive a commission, whether you are incurring expense, all these are due from the consignor. Whether you are incurring expenses or whether you are due to receive commission, you are to receive from the consignor. Therefore, it is debited. consignor's account is debit. And when the consignor is settling, or when you are settling the account with the consignor